But if the true inflation rate is M2, which I believe it is, and if you ask a working class family, do they think that inflation is 2 to 3%, or do you think it's been more like 10% every year for the last few years, or more even? They're going to choose the latter. When you get your groceries and that receipt tells the story for you, that's real inflation. And they can massage the numbers however they want to, and they do, to make it look like things are not like that. But the reality of it is that the real inflation's 8, maybe 10%. And if your investment is not generating 8 to 10% or more, you're losing value. The entire financial sector is predicated on US Treasuries being like a fine place to store your value, park your value, to tread water on inflation. And all the bonds that are on top of that, all the bonds between 4 and 8% are also destroying value. And that's probably the majority of the $300 trillion sitting in the bond market. So the alpha that Bitcoiners have outside of, Bitcoin's properties is that there is a burning platform of, you can't have a 60-40 portfolio where you've got 40% of your value parked in fixed income. You're destroying in value in real terms every year that you do that. And I think Bitcoiners have come to understand that, in part because of like Jeff Booth's perspective on the price of tomorrow, and the escalating amount of debt printing needed to drive any real GDP growth, and how it's 4-to-1 and getting worse. And so Bitcoiners understand you can't just take that proposition, and for other reasons you also come to learn why Bitcoin is extremely attractive on top of not being bonds. I think that's the story of the next 20 years, and I think that's what Saylor's keying in on. I see how he thinks, because on this particular point, because he locked on to what I was seeing and thought that he's onto something here. And so I think that that's his roadmap of what happens going forward, is we demonetize bonds most of all, and that AI and other technology will drive real value for equities. So equities will be winners over the next 20 years. Pretty much everything else is a loser or treading water. And then Bitcoin is the massive winner over the next 20 years.
I think this is important too. It's a winner in terms of fiat, not in terms of Bitcoin, right? Because going back to that comparison of the chart here, I'll pull it up. If we look at this chart and we say the baseline is that the fiat itself is going to grow at 4.4x over these years, and we look at equity and it does a 7.39x, it's outperforming the fiat growth rate.
Right. Yeah.
Right? So
it's a winner. Yeah.
It's a winner in terms of fiat. But when you compare it to the 140x that we expect Bitcoin to do, and if you're using Bitcoin as your unit of account, you just got bludgeoned.
Right. You're losing in Bitcoin terms by holding any equities over the next 20 years. And that's how Bitcoin maximalists end up looking like crazy people, is because you get deep enough into these details that we've walked through, and you start to realize, wait a second, the best asset, the only asset that I really want to hold is Bitcoin, because I don't want to be losing in Bitcoin terms by holding anything else that's going to get absolutely bludgeoned in Bitcoin terms over the next 2 decades.